It is Christmas time, it is sweater season, and I am feeling particularly generous. That's why this is part one of a two-part video series where I'm gonna share with you our outlook on the Mag 7 and every single target zone, every single entry that we currently have on the chart for the Mag 7 titles out of the S&P 500. So stay tuned, we're jumping right in. Hello and welcome to another video by HKCM Global. My name is Joe, and yes, it is Christmas time, it is sweater season, but I'm not the guy for those ugly Christmas sweaters in all colorful variations. I mean, I'm quite into color when it comes to shirts, business shirts. I do like my colors there, but when it comes to sweaters, I really do like the more modest, more conservative colors. But anyways, today, part one out of a two-part video series where we're gonna look at the Mag 7. We're gonna take a look at the 2025 performance of the Mag 7. Yes, 2025 is not over yet, but to get an understanding on what really drove those companies and how the stocks performed over 2025, I think we can't neglect those few days that are still ahead of us here in 2025. So one topic that came up every other week in 2025 has been investors complaining on how much of the S&P 500 performance has been driven by the Mag 7 companies. And so while the Mag 7 really were driving the gains in the S&P 500, AI narrative really was the one topic driving the Mag 7 companies altogether. And so it is no wonder when we take a look in this series about the Mag 7 titles that the titles that have the strongest AI narrative were the ones with the best performance in 2025. And what's also interesting to me is that in 2025 we saw a strong dispersion in the valuation amongst the Mag 7 titles themselves. Again, between those that are best positioned for the AI race and the ones that are maybe lagging a little bit behind in the AI race. And so then let's start right away with Apple here again at Companies Market Cap. Loving that website. Currently sitting at a PE ratio of 36.7. So not that cheap, and still, I mean, revenue is growing tremendously. Earnings also on a perfect trajectory here. Nothing to complain about. However, all in all, if we look at the performance of Apple in 2025, you probably will be as shocked as I am. So because we were coming into the year at quite a high mark. So if then we go at the chart and look at where did we start out in 2025, we've been starting out on the 2nd of January and measuring the performance up until the current point in time. Apple is only sitting at a year-to-date performance of, behold, 9.7%. So even though within the year we saw a tremendous rally here starting from the lows of the big TTC, the Trump tariffs crash, and yes, that's a term I made up just right now here on the spot. So coming out of those lows of the big TTC up until the all-time high here in this year, we have seen a 70% performance. But due to the fact that we came in at such a high mark into 2025, the overall performance in 2025 for Apple is only 9.7%, so rather modest really. And so as reflected here in this chart, Apple in 2025 really was in between a few amazing news and a few downers as well. So for example, a huge topic for Apple, of course, was the Trump tariffs, resulting in both a stagnation in demand for iPhones in China, growing competition in China, mostly due to Huawei. And coming back to the whole AI story, Apple amongst the Mag 7 companies probably has been one of the weakest when it comes to AI narrative. Their Apple Intelligence was just way behind everybody else, and I don't know about you, have you tried it? I have tried it, and it's rather underwhelming to me. So then the biggest driving factor for Apple this year really was their strong service segment. They made record revenues in the App Store, also in various subscriptions for iCloud and so on, and also of course for Apple Pay. Apple Pay was announced this year, I do believe. And so since Apple now is also a payments provider, also lots of money to be earned there. But the AI narrative really wasn't anything that was able to fuel Apple's performance in 2025. And so coming out at a 9.7% here for 2025, rather underwhelming performance for Apple. But anyways, then our outlook into 2026 is as follows. So overall, we have concluded that we have seen here in an ending diagonal the top of the wave 3 here in blue back already in December of 2024, and directly after we entered into this TTC, resulting in the lows of April of this year, resulting then also in the wave 4 low here. And ever since, we have been in a solid upwards channel and trajectory to work on this overreaching wave 5 top here to conclude the even overreaching wave 1 top here somewhere in the area. Hard to tell yet. We will bring a target zone on the chart as soon as we gain more confidence with the substructure here, but roughly guessing somewhere in the area 340, 380. So just a rough guess, right? Do not take that at face value. It would be too early to call. But coming then back to the substructure here for Apple, here on the 2-hour chart, and this again is the direct substructure to this count that I just showed you here. So here on this chart, we do have an active target zone. And normally, if a target zone is active and is also imminent, meaning price action is pretty close to that target zone, we reserve the exact price levels and coordinates to our paying subscribers, link down there in the description if you are interested in becoming a member of that subscription service, where we analyze 200 assets on a daily basis, giving you full portfolio management, entries, exits, all scenarios and updates. But this is a Christmas special and this is a 2026 outlook special, so I want to be super generous here, sharing every single coordinate of every single target zone that we have on the chart currently. So if that right now is not worthy of pressing the like button and the subscribe button, I don't know what is. Please go ahead, do so now. Right back to the chart. So then for our wave 3 target zone here, we have established the zone between the 78.6 FIB and the 123.6 FIB level, meaning we'd be looking at the area between roughly 300, so exactly 299.76, but let's say 300 up until 320. And somewhere in this area, we do expect both the substructure here for the wave 5 and then also the overreaching wave 5, concluding the overreaching wave 3 to come to an end, pivot, and then correct back into an overreaching wave 4, which then would be followed, of course, by another bullish wave 5 upward structure, concluding then this just before mentioned wave 5 of the wave 1 here. But then again, too early to call those exact price levels and pivot points yet. That's why I highly advise you to use an analysis that you trust if you want to stay actively trading and managing your positions in the stock market. So then secondly, Microsoft currently sitting at a PE ratio of 33.8. And so then for Microsoft, same as with Apple, also a rather rough ride in 2025, as you probably had expected. So as every single company out there in the S&P, major hit by the Trump tariffs crash. And so coming into 2025, they came in starting out in 2nd of January up until current point in time. Year-to-date performance for Microsoft at 13%. Good performance, but still rather modest, especially if we look at the top to bottom performance within 2025. So top to bottom performance in 2025 for Microsoft, not as wild as with Apple, but also 61%. So 4 times the performance that we see here for Microsoft year to date. And that of course is due to a few factors. So hugely of course the AI narrative. Microsoft performance is fueled by the AI narrative and also of course by OpenAI. They acquired quite a huge share in OpenAI, and so they control partially OpenAI. They do have an OpenAI integration in their Copilot, and so they are of course viewed as a provider of shovels and picks in the AI gold rush, because Copilot is a vehicle that most companies out there use on a daily basis. So huge driving factor there. However, weighing them down is huge investments into new data centers, which of course in the long run could be an absolute game changer and a solid foundation for long-term rallies. But for now, Microsoft really had investors wondering whether they might maybe have gone too heavy into data center investments already. So then our current analysis and outlook for Microsoft, we have concluded that overall right now Microsoft has established its wave 4 low. So similar as with Apple, is wave 4 low in April of 2025 after the Trump tariffs crash. And we are right now also here working on the big wave 5, concluding the overreaching wave 5 of the overreaching wave 1. So similar count as with Apple, but of course the price levels extensions are a bit different. Also the sub count and substructure is a bit different. That's why here, for example, on the 3-hour chart, so the substructure here to this overreaching chart, also here with the wave 4 low that we just discussed on the day chart in April of 2025, we have ever since seen a wave 1, 2, 3, 4. So the wave 3 that in Apple we are yet waiting for, already established in Microsoft back in August of 2025. Ever since, we've seen a shallow WXY correction and are right now within an active target zone. And this again is something that we never share here in free YouTube videos, because active target zones with even price action within the target zone is reserved for paying subscribers. But it is Christmas time and I feel like giving out gifts. So this target zone here for the wave 4 pivot we have established between 451.84 on the upper boundary and upper limit at the 38.2 fib retracement at a price level of $477.87, and currently sitting at $474. Of course, we're trading within this target zone. If you are looking to get into Microsoft, perfect moment in time right now to do so. Because starting out here from this target zone, from current levels, for example, let's say you're jumping in right now as I'm recording this video up until the next wave 5 high here to conclude the overreaching wave 1, we'd be looking at probably another 30 to potentially even 40% here headroom. And coming back to Microsoft 2025 performance, that's like 3 times the 2025 performance. So if you ask me, great opportunity right here. And lastly at least for this video, we'll be looking at Amazon, meaning the remaining 4 companies, Tesla, Nvidia, Meta and Alphabet, Google, we'll be tackling in the next upcoming video. So stay tuned. That's why I advise you to subscribe to this channel. Also turn on the bell notifications because it will be coming up in the next days. So then Amazon, again, a company that somewhat indirectly profits off the whole AI rally. Why? Because first of all, they do own data centers with their Amazon Web Services and Amazon Cloud Services, which they provide. And again, also they hugely profit of automation within their logistics centers. And likewise in their core business of online retail, they really managed to push up their margins in 2025. So overall, altogether, rather good news for Amazon. And so it's all that more surprising that if we look at the 2025 year-to-date performance for Amazon, we came in blazing hot in January, close to the all-time high. And then starting in January, of course, we saw the Trump tariffs crash with a max drawdown of 28%. And up until the current point in time, we are sitting at roughly a 0% performance for Amazon in 2025. I don't know whether you guessed that or not, but 0% performance for Amazon, that surprised me. And that, of course, despite the rally that we saw within the year. So after the low of the Trump tariffs crash, up until the high, we saw again 60%. So similar performance as we saw in Microsoft, bottom to top. But year-to-date performance for Amazon, a whopping 0%. I was blown by that. And so right now Amazon is currently sitting at a PE ratio of 30. So again, not super cheap, but also if we look at it historically, Amazon has rarely ever been that cheap. And so in the grand scheme of things, a also somewhat similar wave count as with the other 2 giants, but different time frames though. So overall, we have established the huge overreaching wave 4 low for Amazon in December of 2022. Ever since, we've seen a 1, 2, 3, 4, 5 waves up structure here, leading into an overreaching wave 3. And we are currently working on an A, B, C correction, expecting a truncation here. And then starting from this truncation, and again, we just have a rough estimate here. So probably will be looking at the area of roughly $200, maybe sub $200. So from those levels here, we'd be looking at a potential 60, potentially even 70% up leg here for Amazon in the next upcoming wave 5 up to conclude the overreaching wave 5 of the overreaching wave 1, meaning we're really talking about a major topping area here coming up for Amazon, but only after another correction of roughly 10% coming in and another 60% to 70% rally to follow. So this really is already looking quite a bit up ahead into the future. So then the substructure here on the lower time frame for our chart here in this case for Amazon is as follows. We're currently working on the wave C of the overreaching wave 4. We have currently this alternative here on the chart only rated at a 33% probability that we could already have seen the wave C low, therefore the resulting wave 4 low in already back in November of this year, and could already be working our way up here in the overreaching wave 5 of the wave 5 to conclude this overreaching wave 1 that we just discussed on the day chart. So all in all, since there's two scenarios here on the chart with a rather high probability of 33%, we have not established a target zone for entry here, meaning if you really want to get into Amazon right now would not be such a bad moment. And if you want to gamble a bit more, then I definitely wait for these levels here of roughly $200, $205 maybe. If you really want to get in, $205 maybe, if you really want to get into this stock. And if you're just casually waiting for an opportunity, I, at least for my part, would be waiting for our team to establish a target zone here with exact entry levels as soon as we gain more confidence whether or not we'll be establishing this wave C low here still, or whether we'll be directly rising through in this alternative scenario. So if you found that then helpful, check out the link in the description and check out whether one of our stock packages might be helpful and add value to your trading as well. And either way, see you in part 2 here in this channel in only a couple of days. Up until then, take care. Bye bye.